Today I'll be talking about a prominent health insurance player, Oscar Health. It is one of the most innovative players in the health insurance space, which is using technology to reshape how healthcare is delivered and experienced. In this video, I'll walk you through the basics of Oscar's business model, its key products and strategies, its recent financial performance, and what management expects for the future. Whether you are an investor or just curious about the company, this deep dive will help you decide if Oscar Health is a stock worth watching or buying. Let's talk about the company overview. Oscar Health, with ticker symbol OSCR, is a technology driven health insurance company focusing on streamlining member experiences through its Plus Oscar digital platform. As of Q1 2025, it serves about 2 million members across individual, family, and small group markets in the 18 US states. Its key services are individual and family plans, which have metal tiered from bronze to platinum. Other than this, it has small group plans and Plus Oscar platform as well. Its Plus Oscar platform is very popular, which has built-in telehealth, care coordination, virtual urgent care, live chat, and member support tech. Now let's talk about numbers. Oscar is trading in the range of $18 to $23 for the past 1 year. In the last 1 week, it has dropped by almost 25%. However, the company fundamentals are strong. It's all about the bad news and negative reaction from the new Big Beautiful Bill where the Medicaid will be slashed, which has negatively impacted Oscar stock, and that's why it's almost 25% down. When we look at some of more financial numbers, its forward EPS is 67 cents. Forward price to earning ratio is almost 25. Market capitalization for Oscar is almost $4.2 billion. Oscar EPS is positive. It means it is expected to earn 67 cents per share in the coming year. This is a good sign. The company is now making money, big shift from past losses. The price to earning ratio under 25 says that it has a reasonable valuation. It means the stock is fairly valued compared to other growth companies in the healthcare sector. Investors are willing to pay 25 times the earnings because they expect future growth. It has a moderate market capitalization of $4.19 billion. Oscar is a mid-sized company. It's not a startup anymore. It still has rooms to grow. When we look at the financial metrics for the past 3 years, it becomes clear that Oscar Health is growing fast. In 2022, it was a small company, but by 2024, its revenue more than tripled, going from under $4 billion to over $9 billion. Also, the company is learning to manage its costs better. Over the year, it has improved how much money it keeps after paying medical bills. This means it's becoming more efficient. Also, it has shifted from losing money to making money. In 2022 and earlier, Oscar Health lost a lot of money, over $270 million. But in 2024, it finally made a small profit. That's a big turnaround. When we look at Oscar's last 4 quarter numbers, it becomes clear that every quarter revenue keeps growing. Oscar is adding more members and making more money each quarter. However, the profit is not steady yet. In some quarters, Oscar made big profits, but in others, it had big losses. So it's still a bit up and down. However, the margins are improving. Oscar is slowly keeping more money from each dollar it earns by better managing healthcare costs. What is the management guidance? We can take a look at the management guidance for the next quarter and the full year of 2025. For Q2 2025, management did not give a specific revenue or profit guidance. However, they reaffirmed full year targets, which means they are confident about steady performance in the upcoming quarter. The management focus remains on keeping medical costs low and improving operational efficiency so that the margin gets better. For full year 2025, the management guidance for the revenue is $11.2 billion to $11.3 billion. Management also forecasted the medical loss ratio to be between 80.7% to 81.7%. Medical loss ratio is the percentage of revenue spent on medical claims, so the lower is better. Operating profit is estimated to be $225 million to $275 million. In terms of net income, Oscar expects to be profitable for the full year. So to conclude, is Oscar Health a buy? Oscar Health is no longer just a bold startup, it's becoming a serious player in the health insurance space. With strong double-digit revenue growth, improving cost control, and a recent shift into profitability, Oscar has shown that its technology-driven approach to healthcare can scale. Financially, the company is in a much better place than it was just a few years ago. It's generating over $11 billion in annual revenue. It has posted positive net income in recent quarters and continues to improve operational efficiency while serving nearly 2 million members. Further, Oscar's forward looking guidance for 2025, with continued profitability, revenue growth, and tighter cost management, paints a promising picture. If you are a long term investor looking for a high growth company that's just turning the corner into profitability, Oscar Health may be worth a closer look. But if you prefer stability and consistent quarterly performance, you may want to wait and watch for a few more earning cycles. After knowing all this about Oscar Health, we can say that Oscar Health is a speculative buy with high upside, suitable for those who believe in its long term vision of transforming health insurance with technology. That's all for today's video. If you enjoyed the content, hit the like button and subscribe to the channel. See you in the next one.